phone can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there, not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I can stretch it. I can throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Mayron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So, and why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came for Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうとどの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不開心的一些新聞。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとはキャラクターとしてすごくYouTube とかで検索するとたくさんの初音ミクが出てくるんですけども、元々の初音ミクのその原点は歌声を合成するソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていう存在自体がボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでにプロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいやってきて、ライブも数十本、数百本やったの。そういうことが演奏によって起こせるためのそういう器みたいな感じになってきて。初音ミクらしさって僕はあんまりない。初音ミクって何だってありっていうか。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
初音ミクって魂がないので、だからみんな魂を作り上げるために存在する。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer. But humans, they're expensive. For the rest of us, this $60 gadget is all you need.
take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
Expose everything you won't admit. And action. This entire video is based on a true story. When I do like motivational speeches or even tell myself like love yourself and you should love yourself.
This is Lily Singh.
But to fans all over the world, she's the YouTube star Superwoman.
What if everyone to girls, Superwoman? I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada was like,
Canada,
is your daughter making videos? And my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms, and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad, and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oh, Lily, wear the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone.
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up.
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side.
Okay, traders, ready to trade. I'm going to place order to sell short British pound. In the price I'm looking to sell, 149.25. Okay? 149.25. But order placed. So if you want to trade British pound the end of the week, please do so. So please place an order and follow my trades. Stay with me and we'll go through until the end of this trade. I want to tell you that all trade you can see all real money involved. So there are no some imaginary money or paper money like some people talking. We're trading for years, stocks, Forex indices. So stay with me. If you want to subscribe, don't forget you can subscribe to our channel. If you want to get a strategy, you can go to company.co.uk. I'll speak to you after when the order will be filled. Okay? Stay safe. Okay guys, position opened on British pound, as you can see. That's a short position. All of you guys, everybody who managed to sell short, well done. So you entered position, stay with me and we will go through until the end of collecting profit. Okay, you still have chance right now, it moved up, so you can sell short at any price basically. Okay, I'll speak to you later.
Assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly 1/8 of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is
really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what there used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play, because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everything is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. This is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, an equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube size concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The
company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism dies, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, streaming on YouTube. It is Friday, May 14th. Carol Masser along with Tim Stenovic in our Interactive Brokers studio. What a wacky week.
Oh, it is a wacky week. I mean,
with a
capital
W.
In the first 3 days and then buy the dip, investors getting into ETFs big time.
Yeah, exactly. And I gotta say, it's safe to say financial markets taking their cues from the week's economic data. And by that, we mean really the inflation news. Today, we're definitely off and running. Stocks and bonds both up. Yields are backing off, dare I say. Goldilocks economy.
You said it.
I know, I did. Hey, listen, we've got a great show coming up. We're going to talk about a day in the life of Wall Street, a great piece by our own Max Abelson. It's among our most read. We're talking yogurt with Chobani's president, and then the digital shopping boom. And
Yeah, we're also talking a little bit of wine, an IPO for wine.
Fridays and wine go
perfect way to end the day. A little bit of yogurt, a little bit of wine.
Kind of go well together.
Yeah, why not?
All right, let's get a check on the trading day because we do have a rally underway. Let's check in with Doug Krisner. Happy Friday, Doug.
Yeah, Carol, thank you. So the recovery story is very much in place today, particularly given the information we had yesterday. The CDC relaxing those federal guidelines on wearing masks. Energy shares tracking the price of crude oil higher. Crude in New York is up more than 2.3% right now. We're trading $65.30. Now, some of this may be the recovery story indeed, but we also have a weaker dollar with this risk appetite that we're seeing play out in the equity market. The Bloomberg Dollar Spot Index is down about 0.3%. The S&P 500 right now ahead 1.5%. NASDAQ Composite up more than 2%, and the Dow is higher by 1%. If you're looking for data points, retail sales were essentially unchanged last month. Now, the analysts were expecting an increase of about 1%, but on the positive side, the March number was upwardly revised to show a gain of 10.7%, huge positive. Then we go to the information from the University of Michigan on consumer sentiment. We slumped in May, but this reflects growing concern over rising prices, expectations for inflation over the next year at a rate of 4.6%. In spite of all of that, long-term interest rates are down today with a 10-year Treasury yielding 1.64%. I'm Doug Krisner. That's your Bloomberg Business Flash.
I know, bonds and stocks up again, Doug. Like crazy. All right, Jinx. All right, let's get to the Bloomberg Market Drivers Report. We like a dramatic pause around here. Let's set the Business Week agenda with Kriti Gupta, Markets Live reporter at Bloomberg News, on the phone from New York City. Michael McKee, International Economics and Policy Correspondent at Bloomberg News, on the phone from Boston. And we're going to kick it off with you. We needed a dramatic pause before we did the Market Drivers Report because I feel like, Mike, there's been a lot of drama around the inflation numbers, the economic news this week.
Yeah, well, you got some bad news, some bad numbers that are not making Americans feel good over the past week. The jobs numbers were bad. The inflation numbers were higher than anticipated. And retail sales is a little bit of a weird story because we didn't see growth in sales, but in March we saw such strong growth that it really didn't make a difference. And then we matched it in the month of April. So March and April together, two very strong months for consumption. But it doesn't come across that way to the public. So you can see why the Michigan numbers went down. The question is, do people really think we're going to have that kind of inflation, or is it just reflecting the fact that in the beginning of the month, gasoline prices went up because of the whole pipeline shutdown, and we're starting to see some prices for some things go up around the country?
Is there a difference, Mike, when it comes to investor perceptions around inflation and the regular Joe and Jane on Main Street when it comes to inflation and what it means?
Sure. The regular Joe and Jane, as you say, they largely experience inflation through gasoline prices and food prices. They've seen the price of homes go way up, but you don't buy a home every day. You do go grocery shopping quite often during the week.
At least we don't buy a home every day.
Some people.
Yeah, there may be some people. But the people on Wall Street, they're looking at a couple of different things. They're looking at asset prices, obviously, which have skyrocketed. And they're also looking at the report, the CPI report, taking it apart and seeing how many different things are rising in price. But the average person is very much influenced by news headlines. And the headlines have been about higher gas prices and higher airline fares and things like that.
Well, Kriti Gupta, come on in here and talk about asset prices, specifically how things are playing out in the markets today. It's almost like we have investors forgetting about those worrisome inflation figures earlier this week.
Yeah, it kind of looks like that, right? It looks like a reflation rally on the Dow. When the market sells off, we call it inflation fears. When the market gains, it's a reflation rally. Pretty interesting because you're seeing energy and tech both at the top of the leaderboard, and I think that's the most notable market moves that you're going to be seeing today, especially when you have all this green on the screen, because those are traditionally opposites lately. They've been this idea that you either pick tech and you pick the haven, you pick the sure thing that's been doing so well with these really strong earnings, or you pick energy as kind of a play on this idea that everyone's going to go out this summer and travel and take a road trip and all of that. Those are the two kind of opposite sides of the story, and today they're rallying together, and that's when you know that there's a lot of this talk about maybe that sell-off that we saw earlier in the week both in oil and in tech. Maybe it was overdone, and that could be the kind of end result of what you're seeing today.
And Creedy, what are we seeing when it comes to just over the last few days, the way that perhaps this was another opportunity for people to come in and buy the dip? Is that what it's looking like they did?
Yeah, absolutely. I think that's the perfect way to put it, and I've just been saying buy the dip all day today, so I avoided that exact phrasing. But absolutely, I think that's exactly what happened. And I think a really good example of this is that, I mean, yesterday we saw the New York FANG index, which is the index that really houses a lot of those big tech stocks, and really one that I had my eye on this week. It was leading the sell-off from Monday, Tuesday, Wednesday, opened up very high on Thursday, dropped again by the end of the close on Thursday, and is now gaining 2.3%. So to me, that seems like a lot of people are hopping in and selling very quickly. And I also want to give you kind of the counter example here is that on a weekly basis, just given the kind of the pain trade that we saw earlier in the week, Monday through Wednesday, on a weekly basis, we have some losses in the S&P 500 in energy and tech. In ETFs, you actually saw the indexes that were tracking tech gain a lot more funds, a lot more inflow. So it's pretty interesting that there are some people on the sidelines who are still very bullish tech right now.
Exactly. And when things get beaten up, I mean, there's an entry point that's a lot cheaper than it was before. Hey, I want to go back to Mike McKee. Mike, you did another great Fed interview this morning with Loretta Mester of the Cleveland Fed. Of course, she's president there. Let's just share some sound with our audience. Check it out.
We do see the recovery continuing. It's just that we're going to have these month-to-month changes depending on which factors are more dominant. Is it the supply side or is it demand side? And I think the bottom line is it just, we're really at the beginning of this vaccinations widely distributed part of the recovery.
Yeah, the beginning. Mike, come in on this because what was your takeaway from the interview with her?
Well, basically, she's on board with everyone else
yeah.
In terms of thinking that inflation is transitory. But the interesting thing is Loretta Mester has been one of the inflation hawks over the years on the Fed. And the Cleveland Fed houses an inflation center, a think tank on inflation. And so if she's not concerned, it does suggest that maybe the center of the gravity of the Fed is definitely not going to be worried about the rising prices we've seen in the short run.
All right, guys, we got to run. Listen, great setup on this Friday and certainly after what's been a very interesting week, market-wise as well as economic-wise. Creedy Gupta, Markets Live reporter at Bloomberg News. Michael McKee, international economics and policy correspondent here at Bloomberg News.
Well, it's time for the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
So today's number, 7.4 billion. Hyundai will build EVs in the U.S. as part of a $7.4 billion investment that also covers hydrogen refueling stations and unmanned flying taxis. Yes, true. The investments will be made through 2025. The company already has an Alabama factory that the automaker claims builds nearly half the electronic vehicles it sells in the United States. It does feel like this conversation around EVs has definitely become much more aggressive and all-in-one by so many different players.
Yeah, good reminder that even though Tesla is the one with the name recognition, it is not the only player in this category. And in fact, you're seeing competition from the biggest names in the business.
I'm ready for an unmanned flying taxi.
Yeah, so am I.
All right, let's get a check on world and national news. For that, it's over to Ann Keats. She is in our D.C. newsroom. Hi, Ann.
Hi there. Republicans have vaulted Congresswoman Elise Stefanik into the ranks of House leadership. The upstate New York Republican was elected to the GOP's #3 post today and is an ardent defender of former President Donald Trump. The party hopes Stefanik will help calm the civil war within the GOP over demoting Liz Cheney and her ongoing criticism of Trump and his false election fraud claims. Stefanik is taking the leadership job that Cheney held for over 2 years. The COVID-19 vaccines were developed in record time thanks to a partnership with the federal government. But that might not last if there's no dedicated funding for future developments. Bloomberg's Amy Morris reports from Washington, D.C.
The head of BARDA says that federal agency needs dedicated and consistent funding so it can prepare for future pandemics. BARDA is the Biomedical Advanced Research and Development Authority, a federal agency that comes up with new ways to fight emerging diseases. Director Gary Disbrow tells Bloomberg Law the private sector will step up, but the federal government needs to be just as committed. His fear is that progress will stall out as the money runs out, as happened with research into the Zika outbreak in 2016. In Washington, I'm Amy Morris, Bloomberg Radio. Tokyo.
Japan is further expanding a coronavirus state of emergency, currently in Tokyo and 5 other regions, to 9 areas as the government is determined to hold the Olympics in just over 2 months. Japan has been struggling to slow the infections ahead of the Games. California's Vandenberg Air Force Base is being renamed as a U.S. Space Force Base. The name will be changed to Vandenberg Space Force Base, which tests ballistic missiles and conducts orbital launches for defense, science, and commercial purposes. The Space Force was created as the 6th uniformed military branch in 2019. Global news 24 hours a day and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts of more than 120 countries. I'm Ann Cates. This is Bloomberg.
All right, Ann, thank you so much. So listen, Dow Transport's up about 1.6% after a 2.3% gain yesterday. We're definitely seeing really kind of an all-in risk-on trade on the equity side of things today. Having said that, we have been looking at the transportation sector in a big way.
We have. Mississippi River has reopened, freeing over 1,000 stuck barges. You may have heard about this story earlier in the week. Transit under the bridge has been deemed safe for maritime traffic. The waterway has been closed since Tuesday because of a crack in the bridge. Hello, Infrastructure Week.
You mentioned this to me earlier in the week, and you're like, when we were talking about infrastructure, I mean, crack in the bridge found during a routine inspection. Thank God for routine inspections. It did strand a bunch of barges, cut off the biggest route for U.S. agricultural exports when the critical underway is at its busiest. And listen, this is how lots of stuff gets around. It sounds so old-fashioned, but if you think about, first of all, think about all the stuff comes in from Asia on those massive container ships. And this is how stuff moves around the country, because if you did it, some stuff moves on rails, but if you think about rails and roads, it's a slower way of really moving stuff around.
It is, and we're talking about rails in just a minute. We're talking all about Kansas City Southern and CN and that huge deal. But if you think about what's been happening over the past few months and the way that really everyday consumers have learned about supply chains and transit over the last year, we've had some big instances where it's come to light. We had the Suez Canal instance where we learned a lot more about these ships than we thought we ever would.
Right.
And then this week, the Colonial Pipeline hack. And then, of course, this bridge in the Mississippi River that had shut off maritime traffic. It shows the different choke points that are in global supply chains and supply chains here in the U.S. that we rely on each and every day.
Yeah, exactly. And listen, when we talk about infrastructure, it means so many different things. It does mean airports, it means train systems, and you name it, and roads. But if you think about how much in terms of goods getting moved around this country on a regular basis, a lot of it comes through our waterways, and you got to make sure that it's up and running.
Look, a big reminder that Democrats and Republicans agree infrastructure work needs to be done. The question is, how do they get there when it comes to paying for it?
Exactly, and how big a spend to actually make a difference. You're listening to Bloomberg Business Week. We're going to talk more about trains in a moment.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Final day of the trading week. We have the equity market higher for a second consecutive session. There's a lot of optimism now about the recovery story, given the new move by the CDC to relax federal guidelines on wearing masks. Now, apparently, this shift in policy is linked to a new study from the CDC on COVID messenger RNA vaccines. They found to be 94% effective, and I'm speaking here about Moderna in particular. The stock is up about 6% right now, although interestingly, the other messenger RNA manufacturer is Pfizer. Stock is down about a tenth of 1% right now. Energy shares tracking the price of crude oil higher. Crude in New York is up 2.3%. We're at 65.30. Some of this may be tied to dollar weakness. We have the Bloomberg Dollar Spot Index down about 0.3%. But risk appetite in equities, with the Dow Industrial Average up about 1.2%, S&P 500 ahead more than 1.5%. NASDAQ comp climbs by just about 2.3% right now. We are seeing weakness, though, in shares of Disney. It was after the bell yesterday the company reported subscriber growth for the Disney Plus streaming service that was disappointing. 10-year Treasury now yielding 1.64%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, really appreciate that. Well, Kansas City Southern's plan to accept a revised $30 billion merger offer from Canadian National Railway. That would ultimately junk a deal with Canadian Pacific Railway. Kind of need a whiteboard to keep track of this. Anyway, they're competing. Really, it's all about, connectivity with the North American market. Let's get into it. Bloomberg Intelligence Senior Transport, Logistics, and Shipping Analyst Lee Klaskow on the phone from BI headquarters in Princeton, New Jersey. Hey, Lee, good to have you here with Tim and me. So tell us about this. It sounds like, though, there's been some back and forth here. It's not necessarily done yet.
Yeah, hi, Carol. Hi, Tim. Yeah, it's not a done deal yet. I mean, obviously, right now, Canadian National is in the lead for Kansas City Southern. We believe that Canadian Pacific will likely try to, sweeten its deal that it currently has out there. But we don't think that, it necessarily will try to meet or exceed Canadian National's deal. They might be hoping that Kansas City Southern might see a transaction between CP and Kansas City Southern more agreeable to the regulators. The STB kind of approved the voting trust for Canadian Pacific. They have not yet done that for Canadian National. That will just make a transaction a lot more easier to get done. Canadian Pacific has until next Friday, the 21st, to counter. Once they do, who knows, maybe Canadian National can even sweeten its deal even more because at the end of the day, it looks like Kansas City Southern is an asset that both of these want, and both seem to be willing to pay for.
Well, let's talk about that, because here we have potentially, to some extent it's already started, a bidding war for this asset from Kansas City Southern. Talk about the importance of this railway and why these two firms are battling it out for control of it.
Yeah, well, the regulatory hurdles for rail mergers are pretty high. Kansas City Southern in 2001 got a reprieve, if you will, for that high regulatory hurdle. So first off, Kansas City Southern is an easier target to acquire if anyone wants to acquire it. Also, Kansas City Southern has a great network that connects the United States and Mexico. Cross-border is expected to growth is expected to outpace the overall economy. You're having a lot more manufacturers take a closer look at Mexico for the U.S. markets, and so that's making Mexico an attractive place to play. And if you look even longer term, as Mexico tries to improve its economy, grows out its middle class, their economy should be doing well as well. So the real prize here is probably, at least in Canadian National and Canadian Pacific Eye, is that north to south network, and that really is is kind of like a superhighway for the automotive industry as components are brought into Mexico, then they're assembled in Mexico and then shipped back out for consumption in the United States.
What I love about this story, Tim and I were just talking about it in connection with the bridge that was blocking in Mississippi, because that there were some problems cracking the bridge, and how moving stuff around, especially for the ag market, was pretty much stopped. And it's just a reminder, Lee, that railways, waterways, it sounds so old economy, yet that's still how a lot of things move around in this country.
Yeah, I mean, we haven't gotten autonomous trucks right, or flying cars right yet. So these kind of old world, I guess, economy industries are really key for the overall economy, because without them, even as we saw the Colonial Pipeline being shut down, it can really muck things up in the supply chain and really ruin people's lives. I mean, truckers, bring the goods to stores that we all consume on a day-to-day basis.
Well, what does that say to investors, who I think were often so wooed by high tech and the big Uber tech companies that provide so much momentum for the financial markets? This is your area. And like I said, in many ways, it's old economy. But Lee, from an investor perspective or investment perspective, how do investors need to be looking at it? Because it's not something that's going to go away anytime soon.
No, and the rail industry, at least from my perspective, is extremely sexy. I mean, it has operating margins of over 40%.
Oh my God, my favorite comment of the week.
The rail industry, in your opinion, is sexy.
Get T-shirts made right now, Lee.
You're in the right job, Lee.
Go ahead.
Yeah. I mean, they have operating margins of over 40%, and that's pretty compelling. I mean, yes, it is a capital-intensive business. There are a lot of things that could go wrong, because it's, as a lot of rail operators like to say, it's an outside sport. But the reality is it generates gobs of cash, and it's a really attractive business. And then you have businesses like FedEx and UPS. I mean, they are kind of in the sweet spot of what's going on in the world today. The pandemic obviously was a terrible thing, but what it did do is it brought e-commerce penetration 3 or 5 years ahead of where it should be, and that just means increased demand for the FedEx and UPS, and they're also benefiting from a recovering economy where there's business to business or B2C volumes are increasing, and those volumes have great margins relative to the volume that they do when they deliver a package to your home.
Hey, 5 seconds, 10 seconds. Who do you think Kansas City is going to end up with?
Another railroad.
This is why it's sexy. Lee Glasgow, you have a great weekend. Thanks so much for joining us. Lee Glasgow, he's Senior Transport, Logistics, and Shipping Analyst at Bloomberg Intelligence from BI headquarters in Princeton, New Jersey. I love talking about this kind of stuff.
I do too. I mean, what's so remarkable is we talk so much about disruption and new technology, but if you think about it at the core, this is like century-old technology. It's still huge.
Exactly.
It's still so vital, so important.
Yeah, it's really kind of what keeps the economy going and moving around. All right, you're listening to Bloomberg Business Week. This is Bloomberg Radio.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
And this next story, it is among our most read on the Bloomberg. There's a great TV companion piece also, which I highly recommend you go to Bloomberg.com and check out. But first of all, don't go anywhere because we're going to talk with our Max Abelson.
Yeah, I'm really excited about that one. A day in the life of what it's like to get back to work and get back to the office on Wall Street.
Yeah, it's a great read. All right, we'll get to him in just a moment. Right now, though, back to your top stories and another look at that trading day with Doug Krisner.
Hey, Carol. So the recovery story has been boosted today by the CDC move yesterday to relax those guidelines on wearing masks, and we're seeing energy shares bolt higher today. The price of crude oil right now in New York is up about 2.4%, and in turn we have strength in the S&P 500 energy index, and that is helping to lead the S&P 500 higher right now by about 1.6%. Now, in terms of data points today, retail sales were essentially flat last month, but on the positive side, the numbers for March were upwardly revised to show a gain of 10.7%. We also heard from the University of Michigan. The university's consumer sentiment index slumped in May, but this reflects growing concern over rising prices. Expectations for inflation over the next year at a rate of 4.6%. Now, remember the hot reading that we had earlier in the week on CPI. You know, a number of folks have been surprised by the pickup in inflation, and that would include former U.S. Treasury Secretary Larry Summers.
I was on the worried side about inflation, and it's all moved much faster, much sooner than I had predicted, and I think that has to make us nervous going forward.
That is former Treasury Secretary Larry Summers. By the way, you can catch more of what he had to say in a conversation with David Weston. You can join us for Bloomberg Wall Street Week. It begins at 6 p.m. Wall Street time tonight here on Bloomberg Radio. Now, that shift in CDC policy seems to be linked to a new CDC study on messenger RNA vaccines. They were found to be 94% effective. So we have a rally in shares of Moderna right now. Stock is up by more than, nearly 7%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, quite a move. All right, Doug, thank you so much. So this is among our most read stories. In fact, it's the third most read story on the Bloomberg in the past 8 hours. It's about a day in the life of Wall Street, and it really, Tim, shows how New York City is kind of on the cusp of a comeback. It certainly feels it as you walk around the city.
It does. It feels it, and indeed, that's what Max Abelson and Amanda Gordon and so many of our colleagues found when they chronicled the day in the life of Wall Street earlier this week. Max Abelson is finance reporter at Bloomberg News. He joins us on the phone from New York City. Max, this is just a fantastic piece. It's kind of like a profile of downtown. It's a profile of Wall Street. It's a profile of the figures and the characters, from barbers to coffee carts to executives at some of the biggest companies. Take us into the day of a life of Wall Street and why it's showing it's at the cusp of a comeback.
Well, not only am I glad, Tim, that you really liked it, and same goes for you too, Carol, and I'm glad that all of our readers, of course, liked it, but I'm glad that you sort of see it as a profile of the city itself. What a fun way of describing it. The way that I think about it is that what we did, and by we, I mean not just Amanda Gordon, who's great, but Dan Taub, our editor, and colleagues like Sridhar, and my colleague Max Reyes, and Missy, we had a really big team, and that enabled us to kind of take hour by hour snapshots. So I was able to point my camera, for example, at John Corzine, who's after MF Global blew up, of course, the former New Jersey governor and senator and head of Goldman Sachs is now trying to run a hedge fund. And he sort of talked about his solitude for 9 months, but he now has a trader with him, and he's just about to go have his first meeting in person. And then I went to the opening of Power Breakfast, and my colleagues like Amanda spoke with, not just at the high of Wall Street, like John Gray at Blackstone, but Amanda also talked to, a woman who, gets $3 tips to shine shoes in Grand Central. And I think, Tim, that together, what it adds up to is a glimpse of the very complicated industry at a really interesting moment when, as we say, it feels like we're on the cusp of a renewal, sort of the lip of something very, very new.
What's really wonderful too, Max, is it harkens back to the early days of the pandemic when we talked about the shutdown, particularly in a major city like New York City, where, Wall Street was shut down and a lot of people could easily work at home, but the coffee carts, the shoe shine spots, those weren't individuals who could make up work by working from home. They were impacted in a big way, and it just reminds us about kind of the trickle down or the trickle up or the supply chain that feeds into Wall Street.
Carol, the thing that I think about the most as a reporter who, my beat really is Wall Street, is that, in some ways, Wall Street is an ecosystem onto itself. And, but that means, it's a big one. It's an all-encompassing system. By and large, though, the biggest companies on Wall Street, the giants that we cover on the finance team here at Bloomberg News, had an incredible year. And what I mean is, in 2020, they saw remarkable profits thanks to, government support and monster trading. And then in early 2021, they broke those new records. So the reality is, Wall Street, despite all these changes and despite all this uncertainty and despite the diversity of what it means to be in the financial services industry, it's been a remarkable year. I'm not sure anyone quite realized just how lucrative the past year was going to be, even if people were doing it from home.
Well, that's so interesting because it has been so lucrative. The question is, how do they entice workers to actually get back in when they've been so successful from working from home? So what are these companies doing right now to get, and look, for lack of a better term, butts back in seats on the trading desk at the office?
I would say, it's too hard to pick one favorite individual moment. I had a blast with you and Relly, at Michael's, which is a treat to get to go to as a reporter. But I would say maybe the most interesting thing I saw was a CEO, Tim Porter, who runs Jopwell. He said to me, holding his little one-year-old baby, Mia, look, I don't think I can ever go back to working in an office for 5 days a week. Wow. If big banks, he said, want their employees to come back, force them to do it. And this is a guy, by the way, who used to work at Goldman Sachs. Porter said to me, they're going to have to give a really, really good reason about why they should, because it's been a lucrative year from home. He's got to watch his daughter grow up, and he thinks that banks are going to lose talent if they just force their employees to come back without giving them a really gripping and convincing reason.
No, I think of the guy over at Janus, right, who took over for Bill Gross, who's 44, killer spot. It's like the spot you want, and he's like, nope, I'm stepping
want to go to
down.
My daughter's lacrosse games.
Exactly, and there's a bit of a rethink, especially right, when they can max. Still, as you said, Wall Street had a banner year.
The numbers are absolutely remarkable. Now, listen. It may be that Wall Street just sat back and, of course, these are smart people working hard, but, you might be able to say that the Federal Reserve, made it relatively easy for them over the past year, and that Wall Street may now start to worry about what the rest of 2021 will look like. And, that may get them extra eager to get butts back into seats.
It's another great read from Max Abelson. Max, thanks so much. Have a good weekend. Finance reporter at Bloomberg News joining us on the phone in New York City. Check it out at Bloomberg.com.
Well, let's get the latest on world and national news with Ann Cates in D.C. Hey, Ann.
Hi there. The pandemic may have led to a reversal in trends when it comes to who's more likely to move to a new house. Bloomberg's Nathan Hager reports from Washington.
The new trend seems to be high-earning Americans now more likely to move than low earners since the pandemic's led to more remote work opportunities. An analysis from apartmentlist.com finds the biggest jump in residential migration among workers making more than $150,000 a year. About 16% of that group relocated in the past year. That's compared to 11.5% in 2019. The report says it's a break from past data, which showed a strong inverse relationship between moving and income. In Washington, I'm Nathan Hager, Bloomberg Radio.
A defender of former President Trump has been elected to the number 3 GOP position in the House. New York Congresswoman Elise Stefanik takes over the role from Liz Cheney, who was ousted from the position over her ongoing criticism of President Trump over his false claims of election fraud in the 2020 race. Top Democrats and Republicans on the House Homeland Security Commission have reached a deal to push forward with a bipartisan independent commission to investigate the January 6th storming of the U.S. Capitol. Legislation on setting up the panel could be introduced as early as next week. Fuel shortages plaguing parts of the East and south probably will drag on for a week or more because there aren't enough gas tanker trucks to haul supplies to filling stations. Now that Colonial Pipeline has resumed deliveries and service that were halted for days by a criminal hack, the industry is facing a new challenge, a scarcity of trucks and drivers. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ann Cates. This is Bloomberg.
All right, Ann, thank you so much. You're listening to Bloomberg Business Week. It is Friday. Carol Massar along with Tim Stanovic in our Interactive Brokers studio. This story is also trending high on the Bloomberg, among our most read in the past 8 hours. It talks about the group suspected of being behind the massive Colonial Pipeline attack has told other hackers, Tim, that it plans to shut down its ransomware as a service operation and amid pressure from law enforcement.
Yeah, the group DarkSide told its affiliates, these are the hackers who buy the group's malware, on Thursday that it had lost access to some infrastructure, including a blog and payment services. This is all according to Kimberly Goody, Senior Manager of Financial Criminal Analysis at FireEye.
This is interesting. So is this saying that law enforcement came down big time, shut down some of their operations, and basically are they saying we got a lot of pressure and you wonder what that pressure was, even though they got the almost $5 million from Colonial, and then you do wonder what they've lost from their infrastructure that makes it difficult to go forward.
So the Post cited law enforcement pressure. This is what Goody said in a statement. Kimberly Goody, Senior Manager of Financial Criminal Analysis at FireEye's Mandiant. And she said that Mandiant's investigators at this point have not yet been able to independently verify the claims. But what we did learn this week was that it's sort of my interpretation is that the group seemed to have done more damage than it wanted to do.
Yeah.
Right? They didn't necessarily want to go after something that would affect so many people.
Well, you do also wonder, and this story kind of digs a little bit deeper into it by our Kartike Moroto, and it's interesting. You do wonder, law enforcement's like, all right, guys, we're going to maybe let you get away with this one, but that's it. Or you do wonder, you continue with this. Because what's interesting is dark web researchers speculated that the outage could be DarkSide's effort to duck law enforcement given the turmoil caused by the attack. And we're talking about the outage specifically on DarkSide's website.
Yeah, and in a message posted after the attack, DarkSide hinted at contrition and that a, quote, partner might be the ones to blame. They said, we are apolitical. We do not participate in geopolitics. Our goal is to make money and not create problems for society.
God, this is the world we're living in.
It is.
All right, you are listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So Marathon Petroleum had completed the sale of the Speedway fuel retail chain to 7-Eleven. This is 7&I of Japan. Now, Marathon had begun today to get underway with a $4 billion stock buyback program. However, now the head of the FTC is saying this deal raises antitrust concerns. I'm looking at shares of MRO, Marathon Oil, higher by more than 7% right now. Overall, the equity market is pushing to the upside as we get set to enter the final hour of trading for the Friday session. Dow Industrial Average right now better by about 1.2%. Strength in energy shares leading the S&P 500 higher by nearly 1.7% right now. Crude oil in New York is up about 2.4%. Some of this may be tied to dollar weakness. The Bloomberg Dollar Spot Index is down about 0.4% right now. But to be fair, the recovery story is very much intact, particularly with news yesterday on the CDC relaxing those federal guidelines on wearing masks. Now, this change in policy seemed to have been linked to a study from the CDC on COVID messenger RNA vaccines. They were found to be 94% effective. Moderna shares right now rallying by more than 6%. In the bond market, 10-year Treasury yielding 1.63%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug Krisner, thank you so much. So the new issue of Bloomberg Business Week, it's right next to me, and it's on newsstands, it's online, and on the Bloomberg. There's a great story about the SPAC boom. Love that story. We want to get into the issue, though.
We do, and we're going to do that with the help of Joel Weber, editor at Bloomberg Business Week. He joins us on the remote from Brooklyn. Joel, great to have you on each and every day. Happy Friday, by the way. Let's start with Chamath Palihapitiya, the SPAC king, doing just fine even as the bubble starts to burst.
Yeah, that's our cover story this week. And the story is about how, the SPAC craze, which has been one of the, I think the most interesting themes in finance over the past year, has the air has started to come out of the balloon a little bit. But as Zeke Fox writes in this story, Chamath has been such a vocal proponent of this, and it turns out basically even when things don't go so well for investors, and Zeke spends a lot of time looking at Clover, one of the companies that went public via SPAC, that one of Chamath's main companies that he's taken public. While it doesn't always work out for investors, the Chamaths of the world end up being just fine.
Yeah, I'm looking at the SPAC index. It's down, about 24% since the mid-February high. So not so good for the overall group. But as you said, Joel, Chamath, he's doing okay.
Yeah, and he announced that Equinox, the gym chain, is going to be perhaps involved in another one. So we totally expect him to do more. He said he's going to perhaps do as many as 26, one for every letter in the alphabet. He seems to have become much more well off over the course of the past year. But whether or not remains to be determined in the long run for his investors, we'll have to see.
Can't wait for the Q and the Z SPAC.
Yeah, I wonder when that's going to happen. I mean, Joel, we don't want to ask you to predict anything, but there's a chance that he might not make it to all 26 letters.
Well, I think that will be sort of in the hands of investors, right? Yeah. Because if the luster comes off of this game, look, I do think that the allure of a SPAC is a really interesting one. You can go public in a much more easily digestible way, but at the same time, the reason that an IPO roadshow is what it is, and the reason that it has been sort of the hallmark of taking public companies, is because there's a level of scrutiny that you just don't get. So I think a lot of the companies that we're just starting to see go public via SPAC, we're not getting the same level of scrutiny until it starts actually trading. And then we realize that their technology, in the case of Clover, may be not quite what they thought it was.
Exactly. Hey, got to talk about Lauren Eder and her new book, because truth be told, I'm reading it, planning for the day, and I get to Lauren's story, and I just couldn't stop reading it. And
it is so good.
I didn't finish planning and prepping for the day. It is incredible, and it's all about Juul.
Yeah, so Lauren Eder is a projects and investigations reporter at Bloomberg News. This story we excerpted. It's from her forthcoming book called The Devil's Playbook, which is going to be out
on May 25th, I think. And this chapter that we've excerpted is one that, if you've been following Juul closely even, I don't think you know this, which is one of the groups that Juul infuriated happened to be some of the wealthiest, the wealthiest community in the United States of America, which is a town called Atherton outside Silicon Valley, where a certain hedge fund manager, Mr. Bridger at Fortress, basically watched the peers of his high school students, his kids, basically get hooked on Juul, and that's the catalyst that basically led him to galvanize a group of supporters, all with deep pockets, and they were the ones that basically went after Juul.
And Juul, I mean, since then, Juul has had a series of struggles, regulatory struggles. The company's worth significantly less than it was worth when Altria took a stake in it a few years ago. The big question is, what is the future of Juul, and to what extent did this army of wealthy parents have an effect on the company?
I think that this army basically was the factor that tipped the scale.
Wow.
And we still have to see where that regulatory stuff goes. But to give you a sense of, that Altria stake, 35%, it was valued at a peak of about $38 billion. Now it's down to a high of maybe $2 billion. So we're talking a significant change in tune about how much promise there was. And there's a real significant moral of the story here, which is, if you really want to galvanize America against you, get kids hooked on tobacco.
Right.
And that is ultimately what, it's a tune that we're all familiar with. But, Juul made it relevant again.
Yeah, and especially kids with influential parents, Joel, that whether it's in the investment community, the political communities, I mean, these guys, really went to work and played hard against the head of Juul.
Joel, it made me think of what happened with colleges and the way that parents got involved in colleges with the scandals because of their outsized role. I mean, the idea of the parents having this position that's that powerful.
Yeah, I think the college one is an interesting take. It's obviously here it's slightly different.
Where,
you have parents that are effectively protecting their kids, and I think it does speak to a thing that I think we all sort of cherish, which is like our kids. And if you target kids with something that they aren't capable of handling on their own, that's what really seemed to galvanize this group of parents.
Hey, one last.
And just to give you a sense of that, though, it's like these are people that never talk. I mean, we never get to hear it from Fortress directly, but they're willing to talk when you touch their kids.
Well, that's what was amazing, the level of detail in that book, and the conversations and the actions that everybody took. It was just amazing to kind of go through it. Hey, before we end, because I feel like this week has been all about inflation, transitory or not, and Peter Coybe tried to make sense of it. Just got about 30 seconds left here. I'm still scratching my head though a little bit.
We're all still trying to make sense of it, and that's why we did this economics section takeover about all things inflation, what the Fed's role in it is right now. I mean, 2% has been something we've been saying forever that we wanted. We couldn't get it there, and now suddenly it's there, and it's like, how bad is this going to get? And the other element in this package that I thought was really interesting is this idea about the cost of raw materials in China going up, and that means that those prices are going to get passed along to consumers around the world. So effectively, China is going to be exporting inflation.
Good to know, everybody. Happy Friday. Anyway, it's a great issue, great cover, a bunch of wonderful stories to check out throughout the weekend. Joel Weber, thank you so much. Editor of Bloomberg Business Week on the remote access from Brooklyn. Don't forget, two big event happening next week, Bloomberg Live and the magazine. It's called The Business Week, and you're going to want to check it out. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. I'm heading out, so you have a good weekend.
Thank you. You too, Carol.
All right. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
3 o'clock on Wall Street. That gives us an hour remaining in today's session. The equity market pushing higher. A lot of risk appetite given a little bit of positivity on the recovery story. Principally, the news yesterday from the CDC of a relaxation in federal guidelines on wearing masks. Now, apparently, this policy shift was linked to a new CDC study on COVID messenger RNA vaccines. They were found to be 94% effective. We're looking at a rally right now in shares of Moderna as an example. Stock is up nearly 8% right now. In the broader market, the S&P 500 better by more than 1.6%. Energy shares leading this advance, and they are tracking the price of crude oil, which is right now back above 65 the barrel. We've got a gain now of nearly 2.5% in the extended session. And with today's gain, we have basically erased the weekly loss for WTI. Some of this may be tied to dollar weakness today. We have the Bloomberg Dollar Spot Index down about 0.3%. Now, in terms of eco data, retail sales last month unchanged. That was soft. But on the positive side, the March reading was upwardly revised to show a gain of 10.7%. And from the University of Michigan, inflation expectations over the next year at the consumer level, a rate of 4.6%. That would be the highest in a decade. In spite of that, the 10-year Treasury is actually down in yield right now at a yield of 1.63%. Marathon Petroleum has completed the sale of Speedway. That is the fuel retail chain, and it was purchased from, or to rather, the buyer is Seven & I of Japan. But today, the FTC is saying they have got reason to believe this transaction is illegal on antitrust grounds. Marathon right now is down about, let's call it 0.8%. In terms of small cap stocks, right now the Russell 2000 better by 2.5%. You are caught up on the latest in market action. That's the Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. I'm Tim Stenovic in the Interactive Brokers Studio in New York. Some breaking news coming across the Bloomberg terminal right now. The Trudeau government has begun talks on a border reopening plan. Once again, the Trudeau government has begun talks on a border reopening plan. Well, let's get right into it in the latest on COVID. Like we do each and every Friday, we check in with Dr. Ian Lustbader, who's clinical professor of medicine at NYU Langone Medical Center. He joins us right now on the phone from Long Island. Dr. Lustbader, how you doing?
Well, very well, Tim. Happy Friday. Hope all is well with you.
Yeah, happy Friday to you, too. I want to talk about what the CDC said yesterday, because it gives me this idea that we're kind of all going to remember this moment when we learn that the CDC said, if you've been vaccinated, you no longer need to wear a mask when you're inside. It caught me by surprise, given how conservative the CDC has been throughout the pandemic. What was your reaction?
It's certainly welcome news, and I think the CDC, unfortunately, has been a little confusing in their guidelines, kind of waffling a little bit back and forth. But overall, this is welcome news, expected news. You know, we've really known for months that vaccinated people, as per their study and other studies, about 95%, really are certainly safe outdoors. So when you're walking the city streets and you see everyone with masks, I think that's good behavior, but really not necessary if people are certainly vaccinated, and being outside is very safe. And that we've really known that and had that data for many months. So it's about time they came up with that. And indoors as well, for people who are vaccinated, it certainly appears very safe, and that we've known for a while. So I'm glad they've taken the temperature down a bit, so to speak, and reassured people. There's still patients who call who have yet to be vaccinated, or patients who've had COVID itself and have not yet been vaccinated, and they don't know what to do. And that's sort of another story, something to talk about. But certainly if you've been vaccinated, not 100%, we still see some people who've had the vaccines who get COVID, usually a very mild case. But for the majority of people, this is welcome news, overdue, and they should feel happy and comfortable venturing out and enjoying a more normal life.
Yeah, welcome news. And also, I'm wondering if you think it helps push the Biden administration toward its goal of getting 70% of Americans having at least one shot by the 4th of July, because to me, it really represented the idea that vaccines work. Once you get this thing, you can go back to some level of normalcy.
I think Americans are competitive, and I think now that they see their neighbors who've been vaccinated are venturing out without masks and feel more confident, I think they will be motivated, the ones who have not been vaccinated yet, to do that. There's still some vaccine hesitancy. We're up to about 154 million Americans, about 47% vaccinated, but I think the number is actually higher for the people who've had COVID, who've yet to be vaccinated. I think they have antibodies. So I think America is overall a much safer place, but we still have a little more to go.
Hey, Dr. Lustbader, you did mention the idea that some people who have been vaccinated have still gotten COVID, and some are asymptomatic. And I want to bring this up because we learned yesterday that vaccinated Yankees players have tested positive for COVID and drawn a probe. They've had 8 players and staff members test positive for coronavirus this week, despite being vaccinated. That's led to quarantines and drawing an investigation by the state health department. How could you explain this?
So we know that vaccines work by stimulating antibodies, and there are some patients, that 95% number effectiveness with the mRNA vaccines, Moderna and Pfizer, really, those are the numbers. It's unclear why some people don't either form antibodies or form antibodies, but they're not quite as effective or maybe in high in number. And we see that with a flu shot. We see that with really a whole variety of vaccines, that overall they are safe, they reduce the incidence of disease, not 100%. And we have to distinguish patients who are tested positive. In other words, you may have a nasal swab and have minimal symptoms. So I think the vaccines are working, and I think we can say that the incidence of severe disease is dramatically reduced, whether it's J&J or any of the vaccines. And I think the Yankees, who are aggressively tested, may have a positive nasal swab, but that doesn't really mean that they are going to get sick, or certainly very sick. So I think it's interesting why so many Yankees. It's hard to know. Obviously, one of the players in the locker room had COVID or carried it and did transmit it to other players. But the way the vaccine works is that you form antibodies so that if you're exposed to a virus, you have a very quick response. You don't have to wait, get sick, have your own body form antibodies. They're waiting to attack the virus. So it doesn't worry me per se. It sort of fits with what we know about how vaccines work, and they're not 100%, but they are highly, highly effective in reducing severe disease. I don't think we feel any of the people, the Yankees or other people who've gotten COVID after vaccines, have really had a very bad outcome. And that's really what we're trying to do.
Right. We're trying to prevent people from getting really sick and going to the hospital and, of course, ultimately dying. So many people have had that outcome over the last 14 months. Dr. Lustbader, does it at all concern you about the message that it sends, though, about the efficacy of the vaccine? If people see this headline and say, wait a second, these people were vaccinated, they still got COVID.
Yes, I think for those who are vaccine hesitant, they will take this as, see, I was right. Why bother getting the vaccine? Because I get it anyway. So I have patients like that, and I really try and explain the science to them, explain the facts to them, which is that the vaccine will be protective. It's not 100% protective. And as for me, I would prefer, I don't care if I get exposed to the virus, if I'm 95% or more reassured of not dying from it. So that I'll take those numbers.
Yeah, Dr. Lustbader, sit tight because we're going to take a quick break. We're going to do some news, and we are going to come back with you in just a few minutes. Dr. Ian Lustbader is clinical professor of medicine at NYU Langone's Medical Center. He joins us this afternoon on the phone from Long Island. After the break, we are going to talk a little bit more about children getting vaccinated and how we can reach herd immunity without the youngest people in the U.S. actually being eligible to receive a vaccine. In the meantime, let's get a check on the latest world and national news with Ann Cates in the Bloomberg 91.1 newsroom in Washington, D.C. Hey, Ann.
Hi there. Congress is a step closer to setting up a 9/11-style commission to investigate the January 6th riot at the U.S. Capitol. Bloomberg's Nathan Hager reports from Washington.
House Homeland Security Chairman Benny Thompson says he's reached an agreement with ranking Republican John Katko on a bill to set up the panel. It would be made up of 10 members, 5 from each party. Democrats would choose the chair, Republicans the vice chair. Subpoenas would require bipartisan support, and none of the panelists could be current government officials or members of Congress. Thompson says there's a growing consensus that the January 6th attack is of a complexity and national significance that we need an independent commission to investigate. House Speaker Nancy Pelosi says the bill to set up the panel could reach the House floor next week. In Washington, I'm Nathan Hager, Bloomberg Radio.
The Centers for Disease Control has relaxed mask guidance for anyone who has been fully vaccinated, but that is putting major retailers and other businesses in a bind. Home Depot and the parent company of TJ Maxx and Home Goods say they don't plan to immediately change their policies on wearing face coverings in their stores. Macy's, Levi Strauss & Gap say they are reviewing the new recommendation. Gasoline remains in short supply in many areas of the South and Mid-Atlantic as service stations await fuel deliveries. 7 and 10 filling stations in North Carolina have empty pumps. Shortages have also been reported in Maryland, Tennessee, and Florida. And the U.S. Coast Guard has opened the Mississippi River to vessel traffic, ending a shutdown that had stranded more than 1,000 barges. The move comes 3 days after the river was shut down when a crack was discovered in the Interstate 40 bridge that connects Tennessee and Arkansas. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ann Cates. This is Bloomberg.
Thanks so much, Ann Cates. Tim Stenevec in the Bloomberg Interactive Brokers newsroom, joined right now by Doug Krisner. You heard Doug and mention and reference the idea that the CDC's guidance yesterday, that U-turn on not requiring masks inside, has put some businesses in a damned if you do, damned if you don't bind. What do you make of it?
Well, they're in a very tight spot. And, you know, it's interesting because from what I'm reading here, the shift in policy from the CDC was tied to a new study that they commissioned, specifically looking at the efficacy of the messenger RNA vaccines, like the ones made by Pfizer and Moderna. So here's a question. If the data on changing the mask policy was linked to messenger RNA, what if you've been vaccinated by another vaccine, let's say, for example, Johnson & Johnson, where the efficacy rate may not be as strong? How does this change the guidelines, if at all?
You raise a really good point. It also makes me think about the millions of Americans who still haven't been vaccinated, even those who aren't yet eligible for a vaccine. We did learn earlier this week that the Pfizer-BioNTech vaccine has been cleared under emergency use for 12 to 15-year-olds, but that still leaves many, many children who aren't eligible to receive a vaccine. So I think to myself, okay, well, I don't necessarily want to take my son, who's just over 2 years old and obviously hasn't been vaccinated and really doesn't really wear a mask somewhere, if he's going to be around a bunch of people who I don't know if they've been vaccinated and are not wearing masks.
So how do you verify this at the end of the day? And then the guidelines really are about behavior. They don't have the impact of force of law, right? So where are we going to go from this? I think that Anthony Fauci put it really well today in an interview with MSNBC, saying basically it's a major step toward trying to get us back to normality. There are going to be bumps along the way. We haven't even discussed the issue of variants, right? If they show up. What I'm interested in, the efficacy of these messenger RNA vaccines against the variants.
In how long that efficacy actually lasts and to what extent it declines over the next few months. I'm also wondering, too, just about the policies and how companies actually do this. And that's the big question we're going to have to see. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Final hour of trading. What do we have? About 43 minutes until the closing bell. The recovery story seems to be pushing the equity market higher. Let's get you the very latest now as we cross to the Bloomberg Macro Squawk Desk. We've got Bailey Lipschultz with us. Hey, Bailey.
Hey, good afternoon, Doug. As you said, stocks rallied as Treasury yields declined for a second day. The Dow was up 415 points, S&P higher by 65, while the Nasdaq gained 320 points. U.S. 10-year yield is at 1.64%, and small caps are higher by 2.1%. All 11 main S&P sectors are trading higher, led by gains in energy and tech. And Nasdaq Biotechs rose 110 points, transports added 1.5%, semis jumped by 100 points, while the VIX is lower by 16%. Leaders in the Dow, Intel, Goldman Sachs, and Salesforce, while Disney, Home Depot, and Merck are the only stocks trading in the red. Regarding deals, Marathon Petroleum erased gains after the FTC said the sale of Speedway to 7-Eleven may be illegal. And after earnings, Disney fell to a 3-month low as streaming user growth disappointed. The results sparked a 4% drop for Fox Corp. And GoodRx snapped a 10-day slide after results matched analyst expectations. In the crypto space, Bitcoin jumped back above $50,000. The gains led crypto-exposed stocks to rebound, and Seagate led chip makers higher as Morgan Stanley touted a lift from crypto mining. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Doug?
All right, Bailey, thank you. To get live audio updates right on the Bloomberg terminal, the function is SQUA, then the green go key. I'm Doug Krisner, and that is your Bloomberg Business Flash.
It certainly is. Thank you, Doug Krisner. Let's get right back to it with Dr. Ian Lustbader, clinical professor of medicine at NYU Langone Medical Center. He joins us on the phone from Long Island. Dr. Lustbader, I want to talk specifically about kids because last week, kids and vaccines, because since last we spoke, last week, regulators had not yet authorized the use of the Pfizer and BioNTech vaccine for kids ages 12 to 15. How much of a game changer is this?
You know, I think it's important really to vaccinate everyone. We don't know really how long, as Doug and you intelligently raised. You raised a lot of good questions. We don't really know how long the immunity will last, but certainly we think it lasts for at least 6 months. Kids, certainly, the good news is that they have a very low mortality and morbidity from this. Kids do very well with this. Totally different than the Spanish flu in 1918, where young people had a much higher death rate. Here, older people, and the majority of older people in the U.S. are vaccinated. So kids definitely, we need to, ensure safety, but kids really of all ages probably will be at some point vaccinated. I think it makes sense. Obviously not mandatory, but I think it would be smart to do that. And just to address the question about the mRNA vaccines, which again we said in that study were 96% effective. I don't want to discourage people from taking J&J. It's easy. It's one shot. You don't have to go back. Remember that original data was 100% protection against hospitalizations and death. So yes, it's not 95% effective at getting COVID, but it does what we wanted to do, which is to prevent hospitalization. So I think any vaccine available is appropriate. There's not one necessarily better than another, or you need to pick one or the other.
You said that at some point any age will be eligible to receive the vaccine. We know that tests are happening for the mRNA vaccines with children as young as 2 at this point. What's a realistic way for us to think about a timeline there?
That's hard to know. Obviously, we want safety data, and we're not going to have years of safety data. But I think it would make sense to be offering that. It's not a panic because most kids, as we said, do very well. They can harbor the virus. They certainly can get sick from COVID, and they can certainly transmit it. So your concern about bringing your 2-year-old to elderly people or people who are not vaccinated, I think it makes sense. But I think it is safe for people who are vaccinated to have grandkids and young kids around, even though they're not vaccinated. Yeah. So I think that that's reasonable.
Hey, one other thing that Doug was talking about just a few minutes ago was the idea of variants and to what extent these vaccines protect against them. We learned earlier this week that the World Health Organization is reclassifying that highly contagious COVID variant. It's a triple mutant one that's spreading in India. They're calling this a variant of concern. What did that mean to you when you heard that from the World Health Organization?
I think that's an understatement.
Yeah.
What's happening in India is a humanitarian crisis. I think the numbers are going to be really astronomical, I'm afraid, because of a variety of factors, proximity, underlying health, underlying issues like diabetes, for a whole variety of reasons. And unfortunately, or fortunately, that really has not come here. But I don't think we really know how effective our vaccines are against that. And hopefully, the vaccine manufacturers are working on vaccines to that triple mutant variant because it is more contagious. It does seem more virulent. And I think there will be some breakthrough. In other words, I don't think our vaccines, although they may reduce the severity of the disease, it's not going to be as effective as as to what the vaccines were originally designed for. So I think we need to work on a vaccine for some of those variants, and I don't think we've seen the end of the story with what's happening in India by any stretch.
Well, it's interesting, though, because at the same time, here it feels like for many people, especially with the CDC news yesterday, that we are really getting close to the other side of this pandemic. We see states moving to fully reopen here in New York City next week. That's the plan, at least. We still, I think we'll have a lot of people stay home and work from home, but a lot of the regulations and rules that we've lived with for the past 14 months are going to be lifted. How do you see Americans dealing with that?
You know, I think America is very fortunate, and hopefully those variants will not come here or not until we have some vaccines. I do think businesses need to figure out masks and that whole thing. And I think if people are worried, it's okay to wear a mask, socially and otherwise. The masks are not completely protective. You should get vaccines, hopefully encourage people to do that. But certainly if you're in between two vaccines or you've had a vaccine and you're not waiting the 2 weeks, I think it would be prudent to wear a mask, whether it's indoors or maybe even outdoors. But the reality is the vaccines are very effective and should make everyone feel much more comfortable.
Hey, Dr. Lustbader, just in 20 seconds, is there anything that you're not going to do when things are fully reopened? Is there anything that you're still cautious about?
No, I feel very comfortable and go out without a mask now and am comfortable indoors. When I'm seeing patients in my office and we're close, under 6 feet, I still am going to wear a surgical mask. And I think that's not going to change.
Yeah, and indeed, that's what the CDC says still to do in those environments. A mask is still to be worn. Dr. Ian Lustbader, clinical professor of medicine at NYU Langone Medical Center, thanks so much for joining us. We got much more Bloomberg on the other side. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. I'm Tim Stennebeck in the Interactive Brokers Studios in New York. We are just shy of a half hour until the close of the markets and the closeout of this wild week. Coming up in just a few minutes, we're going to be talking with Poonam Goyal, Senior U.S. Retail Analyst, about what e-commerce looks like and what retail looks like on the other side of this pandemic. In the meantime, let's get a check of business news and the markets with Doug Krisner. Hey, Doug.
Hey, Tim. Yeah, we've got about 28 minutes to go now in today's session. Energy stocks leading the broader market higher. The S&P 500 Energy Index up more than 3% right now. This is tracking a rally in the price of crude. WTI in the extended session here in New York, 65.40, with a gain of about 2.5%. Very much part of the recovery story here, and this is linked to yesterday's announcement from the CDC relaxing federal guidelines on wearing masks. This shift in policy, by the way, was based on a new study on messenger RNA vaccines, those made by Pfizer and Moderna. If you look at Moderna shares right now, they're up by more than 8%. Dow Industrial Average higher by a little bit more than 1.1% right now, and in the NASDAQ market, the composite index up by more than 2.3%. The FTC says it has reason to believe that Marathon Petroleum's sale of its Speedway fuel retail chain is illegal. Now, Marathon sold this unit to 7-Eleven and its owner, Seven & I of Japan. Well, today, Marathon had just begun a $4 billion stock buyback program tied to this deal, and shares in Marathon Petroleum right now, they've been caught in a bit of a whipsaw here, higher right now by 1.5%. 10-year Treasury down more than 2 basis points in yield today, right now trading at 1.63%. I'm Doug Krisner. That's your Bloomberg Business Flash.
It certainly is. Thank you, Doug Krisner. Well, one thing that I've certainly been wondering about throughout this pandemic is what trends that have accelerated during the pandemic are going to continue to take hold when we do finally get to the other side of it, specifically retail. How much are we going to be buying in stores versus how much are we going to be buying online? Fortunately, we are joined by Poonam Goyal, Senior U.S. Retail Analyst at Bloomberg Intelligence. Joins us on the phone from New Jersey. Poonam, I know this is a question that you and your team have been thinking about a lot. You have a new report out called The Enduring Strength of U.S. Digital Commerce. So the big question I have is what trends that accelerated during the pandemic when it comes to digital commerce are going to stick?
Yeah, so shopping online is here to stay. It's not going away. You know, there's been a lot of questions about, we were all shopping online last year and through the pandemic and even probably continue to do so. But when things go back to normal, does that shopping drop? And in our view, the growth rates may curb a little, but they will not drop. They will not go negative, and they will only reaccelerate in the coming years. So just to put the numbers in perspective, by our estimate, the e-commerce, U.S. e-commerce accounted for $1.2 trillion in sales in the U.S. last year through the pandemic. That's up 37% from 2019. And while that growth we think will moderate to 11% in 2021, just because people will go back to some normal, we see the $1.2 trillion almost doubling to $2.37 trillion in 2025. That's huge, right? I mean, you're in fact doubling your e-commerce base because people have naturally shifted the way they spend, and the convenience will continue to draw people to continue to shop online.
So who ends up being the winners in this, and who ends up missing out?
Yeah, I mean, it's the retailers that have been winning all along. So if you think about the growth, the $1.15 trillion that will be added in e-commerce over the next 5 years, driving the majority of that growth is non-store retailers. So it's your pure play retailers like Amazon. And we think those retailers will continue to drive the lion's share of the gains. But that said, a lot of brick and mortar retailers are also investing aggressively in e-commerce, whether that's Walmart, whether that's Home Depot, whether that's Best Buy. You know, you're going to continue to see these retailers that have stepped up their investments to step them up even further. And there are easier barriers to entry now in e-commerce. You know, before you needed to have a fulfillment base. You needed to know how to sell online. It's all so simplified that if I wanted to open up a store online, I could do it in hours today.
Yeah, how do you then, I mean, opening up a store is one thing, but but actually satisfying, demand and making sure that you have the logistics in place to actually get those products to people is a different story.
It's not anymore. So you have companies like Shopify, or if you're working with web giants like Amazon, which offer third-party services and fulfillment, all you have to do is make sure that you can get the product, and they take care of the rest. And it's just become very, very simple to sell online today, which is why we're going to see the largest chunk of that $1.15 trillion that's being added in the next 5 years come from these e-commerce-only retailers.
So we are talking a lot about the reopening and making sure what it means for New York City, what it means for the economy, and the reopening happening around the country right now. If you're a brick and mortar retailer, how do you survive in this type of world?
You have to be online. I mean, there has to be a balance. So you can have your stores, because people will not go to stores anymore. They will go to stores, but they'll go to stores where they feel that they're getting more than just picking up an item, right? So they'll want the experience. So retailers like Nike, like Lululemon, where they're actually investing in the store experience, digitally enabling their stores.
So we are talking
their
a lot
stores
about
are still going to thrive. But if you just have a store in a mall that isn't attracting traffic, or it's undifferentiated, those are stores that people close over time, and that will just lend more retailers to, and you can have shop online.
Are there certain segments that you consider recovering at a different rate? For example, I think of my own habits and the fact that we never ordered groceries online before the pandemic hit. And I think now we are going to continue to order groceries online because it's become so easy once we discovered how to do it and once we changed our own habits, if we are able to go to grocery stores.
You're absolutely right. If you think about just food and beverage stores and their e-commerce penetration, so prior to the pandemic, only 5% of food and beverages were consumed online or purchased online, and that accelerated almost double 9% in last year. We see that going to 14% in 2025, and that's pretty dramatic. Now, some of it isn't going to be where the items are coming to your home. Buy online, pick up at the curb, or pick up at the store. It's still going to be a leading driver of that change, but that's still an online order. It's not you're absolutely ordered online. No matter how you have it.
Hey, Poonam, we only have about 40 seconds left, but talk a little bit about
new study from the CDC on those messenger RNA vaccines, one made by Moderna. The stock right now is higher by about 7.5%. Pfizer shares have been kind of chopping around a little bit today. Plantronic right now showing quite a bit of weakness as we make our way to the close, down 21%. Stock had been weaker earlier. The company is a headset maker, and its first quarter outlook missed expectations. Evercore ISI today saying this reflects a drag on revenue from component shortages and pressures on gross margins stemming from higher commodities prices. And the FTC has decided that the decision by 7-Eleven to close its purchase of the Speedway retail chain, this is the service stations, well, it violates antitrust law. Now, the seller was Marathon Petroleum. Marathon shares right now higher by about 1.6%. I'm Doug Krisner. That is your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Yes, it is. We are just over 10 minutes away from the close of this wild week. You heard the numbers from Doug Krisner right there. As the week stands, the Dow set to close down just about 1 percentage point. The S&P 500 off about 1.3%, and the NASDAQ off by about 2.3%. Let's get right to it with Abe Deshpande, founder and chief investment officer at Centerstone Investors. He joins us on the phone from New York City. Abe, what a difference between Monday and Tuesday and what we saw Thursday and today.
Yeah, what a difference between, I mean, you can extend that comparison to now versus this time last year. And, there's been a reversal of sorts in many different ways. And I think the biggest reversal really has been in people's attitudes about, what are consumers going to be doing over the next year or so. And that's kind of driving some of this volatility back and forth.
So what do you make of the sell-off that we saw early in the week, specifically with tech stocks, and how the narrative was that it was really tied to inflation? What changed later in the week? Now we see the tech and energy rallying.
This day-to-day stuff is probably I can make up all kinds of stuff that will seem smart in the short term, but it's really just driven by emotions and sentiment on a daily basis.
Are you not reading too much into the inflation figures that we got earlier this week that really spooked equity investors?
Well, I'm probably reading the same thing everybody else is reading. I guess maybe I was expecting it, and so it's not a surprise to me.
Mm-hmm.
But the big debate really is this a transitory thing, as Powell wants it to be, or is there something more persistent to it? And I think the bond market is basically saying, hey, there's some cyclical pickup in everything, compounded by these sporadic shortages, across the supply chains that are pushing up the current inflation numbers. But at the same time, I think if you have a view of what 30-year inflation might be, it's reasonable to kind of look through the next 6 months, 9 months to try to figure out what are the real driving forces of secular either inflation or deflation. And from a longer-term perspective, not much has really changed, as far as the factors that would drive disinflation over time. But who knows? Anything can happen.
Yeah, well, let's talk a little bit about where you're finding opportunities right now, because I know that's something you're focused on at Centerstone Investors, is opportunities in small to mid-sized companies outside of the United States, as investors really have moved to big tech stocks and large markets like China. Where are you seeing opportunity?
Yeah, so basically anything that's related to, industrial activity or just kind of like the old economy, that stuff got really creamed starting in 2018 and culminating with a great washout in last year. The declines were significant enough that even a doubling in some of the stock prices still leaves plenty of room to the upside if this economic recovery is more sustainable. If it's just a snapback, dead cat bounce or whatever, then maybe these things are not. There's not much more upside. But if from in Centerstone, we're kind of trying to think if we look at the world from a long-term frame of mind, and things look to be recovering. One of the missing links really for much of the rest of the world was the fiscal policy turning positive as it has in Europe. And you're seeing all kinds of policy actually turn more pro-growth in Europe underneath the surface, including with a lot of the conditions that are attached to the new the stimulus plans that the Germans okayed. And, you see a lot of structural reforms that are being demanded, and, countries like Italy, Spain, Greece are coming up with very interesting structural changes to enhance their competitiveness and make them, kind of more interesting for investment as an investment destination. In like the next month or two, it doesn't really matter.
Right.
But over time, these are things that can set up a trend and can create what seems to be a transitory sort of maybe, just kind of bounce back from last year. It can set it into a motion into a much longer lasting trend.
Okay, so just for context, give us the time horizon that you have at Centerstone. What are the expectations your investors have?
Well, what are the expectations investors have?
Yeah, how do you explain those expectations to customers, to your clients?
So typically a value investor is buying a business that, sometimes the prospects are not so, they're bleak, as Marty Whitman used to call it. And cycles do not just turn on a dime, and they don't just recover on a dime. It does take time, and we often ask patience from our own investors of 3 to 5 years. In reality, there are companies that, recover and then continue to grow and may hold on to it for decades. But the typical value investor says, hey, 3 to 5 years is like an appropriate time frame.
Okay, well, let's talk about some of the companies that you specifically are looking at. Fraport, for example, what's appealing to you about that?
I like airports. The assets themselves are very long-lived. The airport itself, Frankfurt Airport operator Fraport, has been in existence for a long time. The airports, it's basically real estate. And just like any other Class A real estate, the intrinsic value of it doesn't really change year to year. In other words, the value of that asset is dependent on the cash flow stream over 50 to 100 years. And so sentiment, however, does drive the stock price up and down beyond its intrinsic values. And of course, as an airport operator, it did suffer traffic-wise, and investors punished the stock, but the stock went from 130. Its intrinsic value is well north of that. Even at 60, this is an example. Like the stock has gone from 30 to 60, but it's still cheap, right? And so our funds, or Centerstone's funds, are like a gold mine, and they're filled with companies like this that have been kind of depressed for a long enough time that the recovery should not just be a few months. It should last multiple years. And then if you layer on top some of the structural changes I was talking about, you have the ingredients for at least a long-lasting, positive performance profile for the funds.
What about Perigo in Italy? Or Ireland, excuse me, in Ireland.
Oh, Perigo. Oh, so that's, it's Irish domicile, but it's actually mostly an American company. They have this tax dispute in Ireland with the Irish tax authority over, I'm not going to go into details. And so people are very focused on that for a good reason. But and then they sort of forget that the core business of Perigo, which is basically selling generic, vitamins, cold medicines, things like that in CVS, but they're also the number one supplier on Amazon. The market position they have is solid. And there's some kind of, the short, again, back to the short-term versus long-term thing. People are disappointed by the current results because they just don't have the patience to wait. And the reason it shouldn't require that much patience. The numbers were weak in their generics business because the cold season, like no one got the flu, right?
What's one thing when we're wearing masks all the time, right? Ave Deshpande is founder and chief investment officer at Centerstone Advisors. I'm sorry to cut you short a little bit, Ave. We are running out of time as we do get to the market's close. He joins us on the phone from New York City. Well, stay tuned because coming up next, it's Bloomberg's Beyond the Bell. It's our cross-platform coverage of the market close with my colleagues from Bloomberg Television. This is Bloomberg.
Beyond the The Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Taylor Riggs, counting you down to the closing bell. And here to help take us beyond the bell, our global simulcast team, joined right now by Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences to parse through all the crucial moments of the day. Moments so crucial, Tim, that both Carol and Caroline decided to take the day off.
Yeah, hey, nobody can predict the future, though, right? That's the thing. Look, going into today, stocks were set to have the worst week in months. Inflation, of course, was the concern, but that shift really seemed to shift toward the end of the week, guys. Thursday and Friday, investors really shrugging it off. Late day rallies on the S&P 500, on the Dow as well, sending stocks higher. Broad-based rally.
And it really was some of that economic data, Tim, of course, that you highlighted. We had CPI, Romaine, we had PPI, you had jobless claims, you had the retail sales today. So really getting a full sort of breadth of the CPI sort of hit the market. Everyone kind of ignored PPI because we had the CPI numbers earlier. The jobless claims, okay, and then retail sales, missing estimates, but of course, further providing some relief here for the market.
And it really was kind of a deluge here that we got with regards to the economic data. And then you think about it, we're going into a week where we're going to be pretty light on economic data. I think we get a couple of housing numbers in there, but nothing too consequential here. So it'll be interesting to see what the market reaction, Tim, is next week when maybe you don't have catalysts pushing in either direction.
Yeah, we're also going to hear from a lot of companies next week, like Home Depot, Walmart, for example, and we're going to get some insight into how they're feeling about the economy. But I do think even though retail sales missed today, guys, just because they didn't change month over month, they're still at levels that we saw last month, which were really high, and last month's numbers were revised upward.
Yeah, absolutely. You're hearing the closing bells here in New York. Let's break it down for you right now. The S&P 500 looks like it's going to finish the day higher by about 1.5%, 4,173. On the week, it's lower by about 1.4%. The NASDAQ up 300 points, up 2.3%. That's about what it's down for on the week, about 2.3%. The Dow Jones Industrial Average, stop me if this gets repetitive, up about 1% on the day, down about 1% on the week. Similar story with the Russell 2000. The Russell 2000 finishing the day higher by about 2.5% on the week, down about 2%.
You never get repetitive, Romaine. We love it. Even with all those superlatives that you bring us on such a volatile week like today, let me draw you back and do exactly the action that we saw today on a sector level. I love this. Everything is green for our radio audience. We're looking at the best performers on a sector level and the worst performer, and nothing is in the red, right? That just shows sort of this broad-based rally that we've continued to see. It is semiconductors, it is auto companies finally getting a big win. I know, of course, we'll talk about Tesla later. Energy, of course, a big rebounder today, despite some of the negative news, Romaine, that we got about Marathon Petroleum and the frustration over that merger. Finally, we take us all the way down to the bottom. For the radio audience, the worst performers, they're still up 0.3%. It's utilities, it's pharma, it's food and beverage, and tobacco, Romaine.
Yeah, you had some breathtaking moves higher on the day. Upstart up 20%, DoorDash up 20%. You missed Tesla there, up 3% on the day. Nevertheless, down 12% on the week. Worst week for Tesla that we've seen going back to at least February, I believe. You keep an eye here on Seagate. That's actually higher here on a Morgan Stanley note that talked about the tailwind it may be getting from cryptocurrency mining. Western Digital also higher on the day. And in the chip sector, keep an eye on that. Remember, we have another chip summit coming up on Thursday at the White House to address that global chip shortage. And the president of South Korea is supposed to meet with Biden at the White House on that Friday. Macy's, you just mentioned it a little bit earlier there, Tim, going to get a lot of retail earnings next week.
Yeah, and Romaine, you had the easy job today looking at the gainers. In a day like today where there's green across the screen, finding decliners and stories about those decliners, relatively difficult still. There are a few to talk about. Disney, the big story, of course. We covered it yesterday. We covered it throughout the day today. The company finishing the day down around 2.5%, of course, adding fewer Disney Plus streaming customers than expected last quarter. Fox Corporation, I think falling in sympathy with Disney, falling nearly 4% today. Plantronics, the headset maker, this one, guys, plunging just around 20%.
We use those, Tim.
We do. I was talking about this earlier in the day, and one of my colleagues upstairs said, "Are you just talking about this because you spend all day wearing a Plantronics headset speaking to people virtually?" And I said, "No, the company's down 20% today. And look, it's a chip story also. Yes. It's a chip story also." Finally, Biogen, down just fractionally, recovered late in the day, but this morning the company said that a study for X-linked retinitis pigmentosa did not meet its primary
Tim,
endpoint for demonstrating
it's not
progress.
bullish on the day. It's all yields. It's all that we're going to do. I'm
You have all
stealing
the fun,
thunder.
Taylor.
No one cares about your decliners, Tim. Let's talk about yields. This is great. On the week, we're actually up on the week. And Tim, this really sort of highlights where we were with some of the CPI data, the PPI data that we got this week, where you had a big up in yield, down in bond price Monday, Tuesday, Wednesday. We've caught a little bit of a bid Thursday, Friday, but you're still at 5, 6, 7 basis points on the long end. You also had 10 and 30-year bond auctions this week. Yeah. 10 was strong, 30 was soft.
You wonder, though, I mean, why didn't you see a little bit more of a reaction in the bond market? Real yields actually slipped a little bit more. You're down to 91 basis points in the hole today, despite this inflation readings that we're getting out of the CPI, PPI, and, of course, the fact that you still have commodity prices, although they pulled back a little bit today, still camped out around some of those multi-year highs.
Yeah, transitory or not transitory is the question when it comes to inflation. If there's one word that really sums up the stock market this week, the equity market this week, it's inflation. Those CPI numbers that we got certainly spooked equity investors, but I think there was something that shifted later in the week that said, wait a second, this could be more transitory, or there is this other camp too that includes former Treasury Secretary Larry Summers, who continues to say that inflation, in his opinion, could get out of control, Taylor.
And we heard about that in the University of Michigan. I just want to read a quote that we got from that about perhaps maybe some of the early indications of how it's starting to weigh on the consumer. Consumer confidence in early May remained tumbling due to higher inflation. Rising inflation means that real income expectations were the weakest in 5 years. They're saying that buying conditions for homes, vehicles, household durables were now more negative than in any time since the last inflationary period back in 1980.
And as you point out, there's a disconnect here, I think, between the way the market and I guess more wealthier individuals are looking at inflation right now and other folks out there who maybe are feeling this a lot more directly here, whether it's the higher costs that you're paying over at the grocery store, at the gas pump, and in other places here. It'll be interesting to see how that sort of affects consumer sentiment in the longer term, Tim.
You know, Carl Riccadonna, Peter Coy, folks we talk to each and every day on Bloomberg Business Radio, and I know you guys talk to him on Bloomberg Business, on Bloomberg TV as well. They say to keep an eye on wage inflation, and that really got me thinking this week when we got the news from McDonald's that at least in its corporate-owned stores, it's going to raise wages there, approaching $13 an hour, not quite $15 an hour. And then in addition to that, the news from Amazon, a company that a couple of years ago said we are going $15 an hour to attract workers across the way, going up to $17 an hour with some new positions on average that they're hiring for.
You don't need wage inflation if you all bought Bitcoin at 5 cents and now it's back up to 50,000. Blink and you missed it. We dipped below, what were we, Romaine? 47, 48 earlier this week. We're back above 50. You know, Ethereum's up. Dogecoin was up. I mean, talk about volatility.
Yeah, I mean, we got to talk about the Doge here. I mean, a lot of people sort of make fun of it, but I mean, look, the general idea here, the outperformance that we've seen in that, the fact that Elon Musk, of course, is now trying to, I don't know what he's trying to do, but now that he's tweeting about it, let's just leave it at that. But the general idea here that you're seeing a lot of these secondary crypto coins now sort of start to take a little bit more of the shine away from Bitcoin. I guess, you know, maybe it's speculation, maybe it's will. You take a look at the board here, you run CRYP on the Bloomberg terminal. We don't have the Doge on the system, by the way.
Not yet.
So, yeah, it's apparently a lot of very serious people at Bloomberg have decided we should not have the Doge on there. But you see Ethereum Classic there outperforming on the day up 24%. And that's actually been the story now for the last couple weeks, guys. Ethereum has actually been the outperformer. Similar story with Litecoin and Monero. Doge, where's the Doge?
Well, Coinbase says the Doge is coming in 6 to 8 weeks, and that's because customers wanted it on the platform. I know, I'm thinking to myself, what takes so long? By then, there will be many more coins that we're going to be talking about.
The Doge will be at like $50 by then. I missed the entry point.
Maybe.
All right.
My favorite comment has to be from Jason Brady of Thornburg, who just said he hopes Jay Powell's more committed to interest rates than Musk is to Bitcoin.
All right, we should end on a high note here, and we got to talk about this. This is very New York centric here.
Yeah.
But New York City, I think it's on Wednesday, is now going back to 100% capacity in most businesses. There's some exceptions here and there, but generally restaurants, theaters, things like that can now, if they want to, have 100% capacity back in there. I guess that's a good thing.
It is a good thing. The question is whether consumers are going to feel comfortable actually going. One of my favorite features of the Bloomberg terminal is checking out turnstile entries. We have the data from the MTA, and it shows a chart. I don't know if we're going to pull it up right now.
It's up
on the screen.
It's up.
There it is.
You missed it.
Look at how much.
You're not getting 100% capacity on the subway.
We are so far from so far from where we were 16 months ago. So people are not riding the subway right now. How long is it going to take to get up to 6 million riders a day? What we saw in March of last year.
It's a great read within the Bloomberg Business Week. I urge all of our readers to check it out. It's on newsstands everywhere, Romaine. Do you know what a newsstand is?
Newsstand? I think I saw one of those once.
It is on newsstands
ago.
everywhere, and it's on the Bloomberg terminal everywhere. It's on the .com. Tim, really fascinating.
Is that where they take everything out on the internet and print it on paper?
And print it on with glossy pictures. But yeah, a
It's a
New
novel
York-centric story, but a good barometer, of course, of how the financial industry gets back to work.
All right, guys. Well, that's going to do it for our cross-platform coverage of the market close on Bloomberg Television, radio, and YouTube. We are going to be back Monday at the same time, same place. Taylor, Romaine, have a great weekend.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, well, there you have it. We are at the end of the week, the trading week. The Dow finishing the week down 1.14%. The S&P 500 finishing the week down 1.39%. The NASDAQ finishing down 2.34%. As far as the day, the Dow finishing up more than 360 points. That's to the tune of more than 1% to the plus side. The S&P 500 higher today by 1.49%, 61 points. The NASDAQ finishing higher by 2.32%, more than 300 points higher. Coming up in just a few minutes, we are going to be speaking with the Chief Operating Officer of Chobani, Peter McGinnis. He's going to join us right here from New York City. We're going to talk all things yogurt and what the company is doing to expand beyond yogurt. Plus, it's Friday, so we got to talk a little bit about wine. You do not want to miss it. This is Bloomberg Business Week, and this is Bloomberg. Let's get the latest on world and national news with Ann Cates in D.C. Hey, Ann.
Hi there. Republicans have vaulted Congresswoman Elise Stefanik into the ranks of House leadership. The upstate New York Republican was elected to the GOP's number 3 post today and is an ardent defender of former President Donald Trump. The party hopes Stefanik will help calm the civil war within the GOP over demoting Liz Cheney and her ongoing criticism of Trump and his false election fraud claims. Stefanik is taking the leadership role that Cheney had held for over 2 years. The COVID-19 vaccines were developed in record time thanks to a partnership with the federal government. But that might not last if there's no dedicated funding for future developments. Bloomberg's Amy Morris reports from Washington, D.C.
The head of BARDA says that federal agency needs dedicated and consistent funding so it can prepare for future pandemics. BARDA is the Biomedical Advanced Research and Development Authority, a federal agency that comes up with new ways to fight emerging diseases. Director Gary Disbrow tells Bloomberg Law the private sector will step up, but the federal government needs to be just as committed. His fear is that progress will stall out as the money runs out, as happened with research into the Zika outbreak in 2016. In Washington, I'm Amy Morris, Bloomberg Radio.
Japan is further expanding a coronavirus state of emergency, currently in Tokyo and 5 other regions, to 9 areas as the government is determined to hold the Olympics in just over 2 months. Japan has been struggling to slow the infections ahead of the Games. California's Vandenberg Air Force Base is being renamed as a U.S. Space Force Base. The name will be changed to Vandenberg Space Force Base, which tests ballistic missiles and conducts orbital launches. Global news 24 hours a day, on air and on Bloomberg Takeaway, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ann Cates. This is Bloomberg.
Thank you, Ann Cates. Tim Stenovic here in the Interactive Brokers Studios in New York. You're listening to Bloomberg Business Week. Our Business Week weekend show features our interview with Julie Bornstein, CEO of the Yes, also former COO at Stitch Fix. In this excerpt, Bornstein discusses the outlook for consumers getting back to shopping for apparel.
I think it's going to be a slow, steady return, especially in fashion. If you kind of look at historical trends, you know, it takes a little while for things to come back. And it also, I think there's sort of this combination of you have sort of this money that you haven't spent in this category, so you're excited to spend it. And on the flip side, you haven't worn anything in your closet for the past year. And so, you know, I think, and then the things that you have bought, you kind of want to burn because you've been wearing, but you have gotten used to wearing comfortable things. So I think there are a number of interesting dynamics at play, and we're seeing a little bit all of it play out. Certainly in terms of some of the, you know, if you look at the product categories that the fashion brands are making, they've added a lot of casual into their line, and it seems as though they will keep that, while also we'll start to see the return of more, sort of clothing to go out in for occasions and ultimately for work, which I think will come back even later because return to office won't happen more at scale until the fall. And so I think the movement to shopping online, really across all categories, is been a change and a trend that will continue as a result of this past year. And so I think it's just more share moving online.
That was Julie Bornstein, CEO of the Yes, also former COO at Stitch Fix. Bornstein, you can listen to the full interview in our Bloomberg Business Week weekend show. We're also featuring interviews from former Best Buy CEO Hubert Joly on the changing role that capitalism has in society and how he's thinking differently about companies right now. Also, Nancy Wilson from Hart, our interview with her in there. And then we also have an interview with Zeke Fox. He wrote the cover story for Bloomberg Business Week this week, all about Chamath Palihapitiya. You do not want to miss it. This is Bloomberg.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So the equity market ends the week with a rally. We had the Dow Industrial Average today higher by about 1%. In the broader market, it was strength in energy that led the S&P 500 to a gain of 1.5%. So it was very much about the recovery story getting a boost from the new relaxed guidelines on wearing masks from the CDC. Apparently, this policy shift was linked to a new study from the CDC on messenger RNA vaccines. One maker, Moderna, stock today was up 7.7%. By the way, the CDC did find these vaccines to be 94% effective. Oil in New York rallied by just about 2.5%. We're back above 65 the barrel. That ignited the rally in energy names. We did have weakness in shares of Disney today after the company missed estimates on subscriber growth for the Disney Plus streaming service. We were talking about that yesterday. Plantronics tumbling 20% today. This company makes headsets, and its first quarter outlook missed. Today we had Evercore ISI saying this really reflects a drag on revenue as a result of component shortages, along with pressure on gross margins from commodities prices. And the move by 7-Eleven to close its purchase of the Speedway retail chain is being called illegal. The FTC says it violates antitrust laws. Now, Speedway was a unit of Marathon Petroleum. Today we had Marathon shares higher by about 2.2%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you, Doug Krisner. Well, if you walk into a grocery store, you go to the dairy section, you are going to see Chobani. It's certainly a mainstay of yogurt here in the United States. The company launched back in 2007 and in recent years has been branching out beyond traditional Greek yogurt. Let's get to Peter McGinnis. He's president and chief operating officer at Chobani. He joins us on the phone from New York City. Peter, it's good to talk to you again. How are you doing?
Hey, Tim. I'm doing well. How about yourself?
I'm doing well, thanks. How are things going at Chobani? How has the pandemic been? What was the last year like for you?
Well, the pandemic's been tough for everybody in all businesses, but I'm proud of how we performed. We set out very early, Tim, very, very early on, to take care of our employees, keep them safe and supported. Safe was the first thing. And supported really was parallel and concurrent. And supported was child care subsidies and special bonuses and time off to get vaccinated. And it really created a healthy, happy, productive workforce. And so we didn't close a single day. We operated 24 hours a day, 7 days a week throughout the entire pandemic because the demand was there. So the plants, the factories ran really well, long and hard, and it was an investment. It wasn't an expense to take care of our employees like that because they're healthier and happier, more productive, and wanted to come to work.
It's really remarkable to hear because over the last year, we've heard of some devastating stories from food processing plants throughout the United States where coronavirus outbreaks took the lives of so many employees. But you put measures in place early at the company, and as a result, there were no coronavirus outbreaks in your plant here in New York and South Edmonston, and neither in the one in Twin Falls, Idaho as well.
Correct. There was community spread.
Right.
But there was no plant outbreak or spread. And that was critical. And we jumped on this in mid-March, Tim, when it was unpopular, to be honest. I mean, let's have a frank conversation here. It was considered a downstate issue. If you go way back a year ago, March, and there was no cases upstate New York. There were no cases in Idaho. And we jumped on masks when it was still confusing. Are masks good, bad, and different? Remember all that confusion? And we mandated masks, and we were able to get equipment, a ton of PPE equipment, and we cleaned every 2 hours in the factories, because remember back then they thought it was really spreadable on surfaces. And we were able to get temperature equipment when you couldn't find it. And this is all done second week of March. And it was interesting because was it wildly popular initially? No. But our job as a company, your primary job, whether I'm president or CEO or the executive leadership team or as a company, is to keep your employees safe. And also keep the company operating.
Yeah. Well, let's talk about
given that there was surge demand.
Well, I want to talk about that surge in demand because you mentioned that you continued operating 24/7 because the demand was there. Even thinking back to last March, last April, when so many companies were struggling with supply chain issues, how were you able to keep things going?
Again, very proud of the team. Our sourcing team leaned in on pre-ordering milk, cultures, fruit, cups, foils, all up and down the supply chain. And we have great partnerships throughout our supply chain. And we were able to secure and procure what we needed. And so we had no interruption on the supply chain side of things. So in terms of the plants running 24/7 and us having enough raw material, we powered through it. And even powered through the height of the pantry loading, which was third week of March, a year ago March, and fourth week of March. And so proud of that. Not only did we do that, Tim, we launched 3 new categories. We launched oat milk, creamers, and coffee, RTD coffee in the pandemic. So 3 new platforms, and we launched 50 new line extensions throughout all of this. So we were able to innovate on top of just operating the base business effectively.
How are those platforms doing? How is the oat milk doing? How are the new products doing?
It's great. I mean, within a year, we became number 2 oat milk in U.S. food, close to over a 20 share, which is just phenomenal. We're really happy, and that's really the strength of the brand. It's branded Chobani. Chobani stands for trust and quality. And so we have a master brand, not a house of brands. A lot of CPG companies have all these sub-brands. We are Chobani, so it's Chobani Greek yogurt, Chobani oat milk, Chobani coffee creamer. And so when you break into these categories, we get quick trial, and we scale quick because the brand is known, trusted, loved. And then the food is great, so we have high repeat. So the oat milk performance has been wild. We're really happy with it, and we continue to gain distribution as we speak. And so I'd say we're just in the beginning, but we're over a 20 share already. Coffee creamer, close to a 20 share. And, in U.S. food overtook Starbucks and Dunkin' Donuts in the creamer segment.
Wow.
And then RTD coffee has only been out for a few months. And we're close to a 7 share in U.S. food there.
Yeah, so, I mean, in recent years, and just stick with us, Peter, because we got to take a quick break. But we're going to be back with you in just a moment. In a few years, Chobani expanding beyond yogurt, no longer just the yogurt company. We're going to have much more with Peter McGinnis, President and Chief Operating Officer at Chobani, in just a few minutes. This is Bloomberg.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Bloomberg Business Week in the Interactive Brokers Studios. I'm Tim Stenevec on this sunny Friday afternoon. In just a minute, we're going to get right back to it with Peter McGinnis, who's president and COO of Chobani, the company expanding from its yogurt roots. In the meantime, let's get a check on the business day with Doug Krisner with the latest. Hey, Doug. Let's take a look at how the markets closed out the trading day today. It was a wild week. The Dow finishing higher by more than 360 points. That's more than 1%. The S&P 500 higher by 1.49%, finishing out the day more than 61 points. It's the plus side. The NASDAQ finishing the day higher by more than 304 points. That's a gain of 2.32%. Still, it was not enough to end in the green for the week. The NASDAQ finishing the week down by more than 2.3%. The S&P 500 finishing the day, or the week, down by close to 1.4%. And the Dow Jones finishing the week down by 1.14%. Let's get right back to it with Peter McGinnis, President and Chief Operating Officer at Chobani. He joins us on the phone from New York City. Peter, Chobani was started back in 2007, and there have been a handful of changes in how the company has been structured over the last few years. I know your role has changed significantly over the last few years, going from a marketing role to the Chief Operating Officer role. Talk to me about how you're thinking about the future of Chobani. The Wall Street Journal reporting earlier this year that you guys are eyeing an IPO this year with a valuation between $7 and $10 billion.
Yeah, Tim, so I can't talk about an IPO today on this beautiful sunny Friday. But look, I think we're going to continue doing what we do. We disrupt and we challenge the status quo. And I think that goes back to Hamdi's really original vision and philosophy. He came to this country from Turkey. He looked at the food system and the food industry. He saw a lot of exclusive food in specialty stores that was high quality, but high priced. And so that notion of democratizing better options and better food for more people, and good food is a right, not a privilege, really is what keeps us going every day. And so that's why we've built factories over the last several years. We've built critical disciplines, from in-housing our entire marketing department and advertising and design to our sales functions to our retail execution team. All of that is now in-house. We've built a plant within a plant in Idaho to do creamers and RTD coffee and oat milk because we wanted to disrupt those categories and elevate them. And so we're going to continue doing what we're doing. And that is providing better options for more people in many categories, because the brand, not only is it strong, it can stretch.
What are those other categories, Peter, that you're eyeing?
Right now, we'll stick with the four. Because a year ago we were in one category. Today we're in four, and we have more work to do. And so we're going to focus on maximizing these four, but it won't end there, Tim. And then we're also going into new channels. You know, we're deeper in drug and convenience. We're deeper into food service now, particularly with our oat milk barista. So you're seeing us at more cafes. We went south of the border into Mexico, which is a huge market. And we're going to exponentially grow in Mexico. We went north of the border into Canada with all of our plant-based options as well.
How do you guys think about grocery delivery? Peter, I don't mean to keep cutting you off, but we only have a few minutes left, and there's a lot that I want to get to. How do you think about grocery delivery as it has increased during the pandemic? I mean, have you had to make changes to the way that you are allocating or at least selling to different types of grocery stores, brick and mortar versus the large players in delivery like Amazon-owned Whole Foods?
Yeah, we've always been big at Amazon, Tim. We're share leader with our yogurts there and now oat milks. So it has not fundamentally changed. And most of the brick and mortars, whether it's Walmart or Target or you can shop right here locally, or Stop and Shop, I'm not sure what local is, also deliver. So they're brick and mortar, but they're also, they're not pure play online, but they're brick and mortar, and they have online components, and so they're doing delivery, and we get our fair share of that. So we haven't had to fundamentally change our playbook on that to take advantage of, that trend.
Let's talk labor and employees, because we got the jobs report last week that was a shock to many, many people. 266,000 jobs added versus expectations from economists for 1 million new jobs. There's tension between attracting employees because these jobs are available, as we learned from the JOLTS data earlier this week, but people are not necessarily going to those jobs. Are you having a hard time attracting employees right now?
We are faring better, Tim, but the labor market is tight, and I don't want to say we're immune. We're faring better, and I really think it's fundamentally, Tim, from what we just discussed in the last segment, which is we took care of our employees through the pandemic, and that pays off over time. I mean, it's an investment, not an expense, and doing the right thing is good for business, and so our retention rates are quite high. So we haven't had high attrition. That's the first piece. The second piece, the brand's pretty exciting, and we're breaking into new categories, and we're liked as a company. So our recruitment has been in good shape. It's been quite effective. But it's not what it used to be. So I'm not going to sit here and tell you that we're completely insulated. We're just faring better.
Well, to that point, when you do find you lose employees, where do they go?
Yeah, a myriad of places. There's more options, Tim. And like I said, our attrition is very low. But when people do leave, there are, first of all, when you look at the federal programs and the state programs, that all rolls up to about $19 an hour, close to it, right, in New York. And I think that's what you're getting at. That's hard to compete with, if you think about it. But look, because the economy is so hot, there's a lot of building going on here. So, could lose people to construction jobs and, landscaping jobs that have more flex hours. There are a lot of distribution centers being built, new factories being built. There's just more competition. And it hasn't been an issue for us yet. And I think that's because of what we've been a very employee-centric company from the beginning, and we took care of our people. And like I said, throughout the pandemic, we've given special bonuses and childcare subsidies. Those are still in place. So all those things that we did in the pandemic have come to play now in terms of our low attrition and high retention.
Peter McGinnis, we are going to have to leave it there. It was really great to reconnect with you. Thanks so much for taking the time and for joining us on Bloomberg Business Week Radio. Peter McGinnis is President and Chief Operating Officer at Chobani. He joined us today on the phone from here in New York City. Well, let's get a check of the latest world and national news with Ann Cades in the Bloomberg 99.1 newsroom in D.C. Hey, Ann.
Hi, Dan. The pandemic may have led to a reversal in trends when it comes to who's more likely to move to a new house. Bloomberg's Nathan Hager reports from Washington.
The new trend seems to be high-earning Americans now more likely to move than low earners since the pandemic's led to more remote work opportunities. An analysis from apartmentlist.com finds the biggest jump in residential migration among workers making more than $150,000 a year. About 16% of that group relocated in the past year. That's compared to 11.5% in 2019. The report says it's a break from past data, which showed a strong inverse relationship between moving and income. In Washington, I'm Nathan Hager, Bloomberg Radio.
A defender of former President Trump has been elected to the number 3 GOP position in the House. New York Congresswoman Elise Stefanik takes over the role from Liz Cheney, who was ousted from the position over her ongoing criticism of Trump over his false claims of election fraud in the 2020 presidential race. Top Democrats and Republicans on the House Homeland Security Commission have reached a deal to push forward with a bipartisan independent commission to investigate the January 6th storming of the U.S. U.S. Capitol. Legislation on setting up the panel will be introduced as early as next week. Fuel shortages plaguing parts of the East and South probably will drag on for a week or more because there are not enough tanker trucks to haul supplies to filling stations. Now the Colonial Pipeline has resumed deliveries that were halted for days by a criminal hack. The industry is facing a new challenge, a scarcity of gasoline trucks and drivers for them. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ann Cates. This is Bloomberg.
Thanks, Ann Cates. Tim Stenevec in the Interactive Brokers Studios in New York. This is Bloomberg Business Week. And our Business Week weekend show, it features interviews with former Best Buy CEO Hubert Joly on his new book, The Heart of Business, Leadership Principles for the Next Era of Capitalism. In this excerpt, Joly explains what motivated him to write the book. Check it out.
It's clear that we're facing a multifaceted crisis, right? A health crisis, economic crisis, societal crisis, systemic racism, environment, geopolitical, the all-you-can-eat menu of challenges. And so what's the definition of madness, Carol, right? It's doing the same thing and hoping for a different outcome. And I think at Best Buy, over the last 8 or 9 years, we've demonstrated there's a very powerful way to achieve extraordinary results by putting people and purpose at the heart of business. And I think that's a philosophy that is particularly relevant today, because I think we need to see businesses be a force for good. I think I've seen at Best Buy the power of unleashing human magic in support of that purpose, and the importance of embracing all stakeholders, including community and the environment, and treating profit as an outcome and not the goal. Even though, during my tenure or since I became the CEO, our share price went from $11 to now between 110 and 120. So it's a very powerful formula. It's one that's very relevant today, very needed. And I thought that in writing this book, leveraging the experience I've had, I could help others on the journey. So many of us are on this journey, right? Who doesn't want to be on that journey? And who are eager to lead from a place of purpose and with humanity. And we all know it's desirable and it's hard, and I think that's with the experience I could help.
That was former Best Buy CEO Hubert Joly on his book, The Heart of Business, Leadership Principles for the Next Era of Capitalism. For the full interview, it airs in our Bloomberg Business Week weekend show, 8 a.m. tomorrow, Wall Street time. You can also hear our interview with Nancy Wilson from Hart and Zeke Fox, who wrote that cover story on Chamath that is in the current issue of Bloomberg Business Week. This is Bloomberg.
Sri Lanka.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We had higher equities today as the recovery story was boosted by the relaxation on the mask-wearing guidelines from the CDC. Apparently, the shift in policy was linked to a new study from the CDC on messenger RNA vaccines. They have been found to be 94% effective. One maker is Moderna. Those shares were up by 7.7% today. Pfizer, the other, interestingly, the stock was down about 0.2%. Obviously, Pfizer's vaccine is in partnership with BioNTech. Energy shares tracking the price of crude oil higher today. WTI picked up more than 2.5%. We settled above 65 a barrel in New York. Now, some of that may have been tied to a little bit of dollar weakness today. We had the dollar, if you look at the Bloomberg Dollar Spot Index, down about 0.4%. In the equity trade, the Dow was up a little more than 1%. S&P 500 higher today by 1.5%. NASDAQ comp climbs 2.3%. We did have weakness in Plantronics. Stock was down 20% today. This company manufactures headsets, and its first quarter outlook missed. Today we had Evercore ISI saying this really reflects a drag on revenue from component shortages along with pressure on gross margins as a result of higher commodities prices. Now, the move by 7-Eleven to close its purchase of the Speedway retail gasoline chain has been called illegal. The FTC saying today this violates antitrust law. Speedway had been a unit of Marathon Petroleum. The deal was worth $21 billion. Today, Marathon Petroleum shares picked up 2.2%. If you're looking at a couple of data points, retail sales essentially flat last month. Now, the estimate was looking for a gain of 1%, so ostensibly bad news, right? But on the positive side, the March number was upwardly revised to show a gain of 10.7%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you, Doug Krisner. Well, it's Friday, just before 5 p.m., so the perfect time to enjoy a glass of wine, or at least talk about wine. And that's going to be with Terry Wheatley, president of Vintage Wine Estates. She joins us on the phone from Sonoma, California. Vintage Wine Estates has a portfolio of wines and spirits from wineries throughout Napa, Sonoma, Oregon, and Washington, and also California's Central Coast, which is where I'm from. So this is particularly special for me. Terry, thanks so much for joining us. How you doing?
Oh, I'm doing great. Thank you for having me.
Well, let's talk about the wine business right now, because Vintage Wine Estates is set to IPO later this month. Why is now the right time to IPO?
Well, why go public now? I would say many of the wine companies have really suffered during the pandemic with their tasting rooms closed, which is a great primary source of wine club signups. Their on-premise business closed across the country. So we are entering an unprecedented time of opportunity for acquisitions. So for us to access the public market, it just made sense for us to get that firepower in capital to go out and continue our track record of acquisitions. So we've done 20 acquisitions in the last 10 years. So we're looking to do 20 more in the next 10. If not more.
20 or more in the next decade. That's a large number. I'm wondering, and then you're planning to raise $690 million in the IPO. Are there certain regions that you're looking at? Are there certain types of wineries? Are there certain types of spirits? What's appealing to you from an acquisition perspective right now?
Well, we will not acquire a spirit company. We will be looking in the wine space, primarily California. We do look at Washington and Oregon. If you're from the Central Coast, that's really attractive to us. We have you might be familiar with the Letitia Winery here in San Luis Obispo.
Yep, that's where I'm from.
Oh my gosh, that's great.
In order just to get a plea deal, what would Greenberg have to...
And continues to do really well. So that type of acquisition, wineries, we really play in that $10 to $20 retail sweet spot. We'll probably acquire there. We may step it up a little bit. Maybe it'll go into $25, $30 a bottle at retail, but really focused on California, Washington, Oregon. You won't see us buying international properties or things on the East Coast or Texas or any place else. Really focused on the West
So
Coast.
Terry, when you do buy a winery such as Letitia and you do incorporate it into the Vintage Wine Estates portfolio, what are the changes that you bring, that you make to increase efficiencies, to make the acquisition make sense?
Well, for Letitia, the great thing about the way we purchase, maybe up against other people in our peer group, is that we try to keep the infrastructure the same. So the winemaker, Eric Hickey, is still the winemaker there. His father was actually the winemaker previous to him. But we infused capital we just put in some additional production capability there. We're improving the vineyards, just increased capital. We're working on, as you probably know, driving into Letitia is a little interesting. So we're working on a new entrance and how you get out of the property. So again, it's capital. We go in and we take out the redundancy. So we bring in their financial, all their finance teams and stuff. We incorporate that. So the back office, we really try to incorporate that into the Vintage Wine Estates headquarters. But besides that, we try to keep these wineries individual with individual personalities, and it's really worked for us. So I'm so pleased that you're so familiar with Letitia.
Yeah, among many other. You drive there these days in California's Central Coast, and it's just vineyards as far as the eye can see, which raises the question just about climate change and water, because that's something that many areas of California struggle with. How do you think about a natural resource like water and that it is, in fact, it's always a drought?
Well, not always.
It feels like
not always, but it feels like we're in a drought right now, which makes for interesting farming. But where we can, we dry farm. We are always looking at water conservation, recycling, and so forth. We do that with the energy, our production plant up in Hopland. We have solar, so we try to make our entire facility there, supported by our solar panels. So we really do have an eye on sustainability for our vineyards with water conservation and so forth. So it's top of mind in everything that we do. But, we are in California. We are in the farming heartlands. And so that is always a concern. But if you're constantly working on how you protect the water resources, we feel like that we have a good plan in place.
Terry, you mentioned the way that the tasting rooms and actually on-premise just took a hit during the pandemic, and how wine clubs were really affected because tasting rooms are such a big part of how people actually learn about wines. What adjustments did you guys make to your portfolio of brands at Vintage Wine Estates? How did you get through the pandemic?
Well, unlike other wineries in our peer group, we actually grew during the pandemic in our direct-to-consumer business. So we are lucky that we're diversified, and we have 14 tasting rooms. Again, that really feeds our 19 wine clubs. But we have an e-commerce email list of over 850,000 people. We mined that e-commerce list during the pandemic. We own the Cameron Hughes brand. We believe that's the largest digitally native wine brand out there. That really grew during the pandemic. We have a telesales group that is selling over the telephone. Yes, people still do that, but the Windsor wine brand, where you do custom labels and people shop that. And last but not least, we do probably 90% of the wines that are sold on QVC. That business just went through the roof. So we had multiple levers that we could pull to grow during the pandemic, unlike other people in the wine space.
Terry Waitley is president of Vintage Wine Estates, joining us on the phone from Sonoma, California. Terry, thanks so much for taking the time. This is Bloomberg Business Week, and this is Bloomberg.